Thank you very, very much. Much appreciated. Okay, I'd like to invite Mason Capitani to the podium to introduce our illustrious speaker, please.
Good morning. As chairman of CORFAC's Professional Development Committee, it's my pleasure to introduce this morning's keynote speaker, Dr. Mark Dotzour. Dr. Dotzour is a real estate economist who served for 18 years as chief economist of the Real Estate Center at Texas A&M University in College Station. In 2015, he stepped down from his position at the Real Estate Center to focus all of his time and effort on analyzing current economic conditions and communicating his analysis to others. Mark combines academic training in economics, real estate, finance, and history to provide his audience with a toolkit of useful information that will help make them good business decisions. After earning his PhD in finance and real estate from the University of Texas at Austin in 1987, Dr. Dotzour was a tenured professor of real estate and finance at Wichita State University in Wichita, Kansas for 10 years. Prior to his academic career, he was president of Glen Eagles Development, which was a residential land development firm in Wichita. Mark's research findings have appeared in the Wall Street Journal, USA Today, Money Magazine, and Business Week. One point that I'd like to make is we are live streaming this event, so if you do see somebody with a camera, please try not to walk in front of the cameras. And with that, I'd like to welcome Dr. Mark Dotzour.
Welcome. Hi. Thank you.
Sorry.
Perfect. Thanks for your help.
You're welcome.
Let's get the slideshow going. I can use this, actually.
You're all set.
Okay,
Thank you so much.
thanks. Well, it's great to be with you this morning. Thanks for inviting me to be a part of your program. The fall meeting in London certainly looks like a fun event. I look forward to being there with that. It sounds fun. Some of you, quite a few of you probably have never heard me speak before. I've done this for 20 years. I've done almost 1,600 of these to 275,000 people, so this is my first rodeo. And I just got to let you know, I'm going to talk about government policies in the United States a little bit. I can't stand politics. I find that Democrats and the Democratic Party and the Republican Party are both kind of a blight to the future of our country. And so I'm going to talk about policies, and so if you could kind of just check your political leanings. I don't really care if you're left or right, it means nothing to me. If you could kind of just check that at the door, because I'm a business economist. I spend my time talking to businessmen and women and investors that are trying to make decisions, and that's my goal today. I have to warn you, I might say something good about Donald Trump, and I know that's outlawed in at least 39 states in America. I don't like Donald Trump. I didn't vote for him. I think he's an idiot. I didn't vote for his opponent either. In Texas, we had a third option. His name was Gary. I don't know who Gary was, but I voted for him. And so, but the point of the matter is, I try to avoid politics at all costs, and but government policy does matter to real estate decisions. My goal today here, with the time I have with you, is to just try to give you're all the experts in the field. Everywhere I go, the audience is like the expert in what they do, so I don't out-expert anybody. All I'm going to try to do is give you some information that might help you plan your own business decisions going forward, understand what your clients might be thinking, their psychology, and also lenders and investors and what their psychology is. Everything I'm going to talk about here is going to be related to one of two topics. One is, are my buildings going to keep filling up with tenants? And two, what's the expected value trend of commercial real estate? And so that's what I want to do with you today. I always like to have a theme, and this clear sailing ahead came to my mind, and I tell you, doing this for 20 years, it really bothered me. As an economist, you all know this, but I'll just state it again. As an economist, there's a 50% chance anything I say is correct, all right? You guys could have paid $500,000 to get Alan Greenspan or Bernanke or Janet Yellen. Their odds of being correct aren't any better than mine. And so with that said, with a 50%, I was thinking about this, I thought, man, it just looks like clear sailing ahead. And man, that really was hard for me to do. I kept going back, going, no, I don't want to do that. What if I'm wrong? And so I would go back and look for more data, and there's nothing there. And then I would look for data over here, and nothing there to refute this. And over here, and finally, when I got done, my conclusion was the only reason I wouldn't come out here and say there's clear sailing ahead, because the data all points that way, would be is just because I don't have the guts to come out and say it. So pretty much everything looks pretty good. So with that said, this is a fun time to be in the business. I was giving speeches in 08, and 07 and 06, warning people about what was coming. I knew at the time, I didn't know what was going on, but I knew that Fannie Mae and Freddie Mac had stopped filing quarterly statements with the SEC and should have been delisted from the stock exchange in 2006. I was going around telling people, I don't know why this is happening, but all I know is they're not filing quarterly statements. They should have been delisted from the markets, and they're not, and nobody in government is talking about it, and nobody in business is talking about it, but something ugly is getting ready to happen. That's all I knew about that. So back at that point in time, people would say, you know, Mark, for an economist, you're still pretty funny, but why is it that whenever I hear you, I feel like I feel like taking a warm bath with a glass of red wine and a razor blade. So this is the only hazard about doing things with other people's computers. I'm getting a message up here. It says, would you like to reboot your Windows right now? I'm thinking, no, not really. I'd prefer not to reboot Windows just a second. People have been asking me, okay, I'm going to need some help here because this is not syncing up with the screen. Why would that be? I guess I'm going to need some, oh, okay, it's just slow. All right, I'm kind of slow too. We'll match up good. I can sync with this pretty quick, okay? Yeah, maybe that's a good idea. Okay, starting about a year and a half ago, people would come up to me and say, what inning are we in? And in the United States, in a capitalistic system, what that means is how long is it going to be before we have another recession? Typically, an expansion lasts about 60 months. We're in a month 105. It's March now. So we're in month 105. Only two have lasted longer, the 1961 expansion and the one that happened in the 1990s, 120 months. And so as we look at everything, I can see why people are thinking that sort of thing, but the data is not showing it. There is no indication of an oncoming recession right now. And that's why I feel like clear sailing ahead is an appropriate comment. Wow. Okay. This is weird because what I'm seeing here is not, so I'll try something different. Let's see if I can just do it this way. Yeah. Okay. The U.S. Index of Leading Indicators, this is a federal government source. It's a crystal ball sort of thing, and it's a good one. It's one of the premier ones that way, forward-looking. And this Index of Leading Indicators is showing absolutely no indication of a recession anytime in the near future whatsoever. Then other people ask me, how long can this expansion last? When will we know it's over? And my answer to that is, my definition of a recession is when we stop creating jobs. When you're talking about, are my buildings going to fill up, what you're really asking is, what's the outlook for employment? As long as we're creating jobs, we expand, and real estate looks good too. This is actually the number of people that are getting a job in the United States every month. And it's anywhere from about 80,000 to 250,000 people. It's just crazy. And as long as that number continues to ride, your buildings will continue to fill up, and asset values will continue to rise with it. I'm going to talk about interest rates and cap rates too as we get later on into this presentation. But this is great news. Consumer confidence in the United States exploded the day after the election. I didn't expect it. I'm 63 years old. I've been doing this for 20 years. I've been in real estate since 1970s. So I don't get surprised by a whole lot, but I was surprised at the amount of business enthusiasm the day after the U.S. election happened. I'm in meetings like this every week. I did 73 of these last year. I'm in blue state, I was going to say green state. You can see how much politics I know. I've been in red states and blue states and every other kind of state you can think of. And it was uniform. I didn't meet one businessman or woman after the election that wasn't giddily euphoric about the election results, largely because my impression was because people in America are sick and tired of government regulation. The idea that you're no longer going to be under the impressive thumb of a regulatory environment was enough to create an enormous amount of enthusiasm in this country. And as you can see, consumer confidence jumped right after the election and continues to go up, and now it's higher than it was in '07. I thought I'd never see the day when we would feel as much confidence as we had in 2006 and 2007, but here we are beyond that stage. Another surprise, there's several things that have been surprising me, and here's another one. How many of you have ever seen a situation in your life where a president gets elected to office, does something, and then company after company says, we're going to hire people? I've never seen it before. I don't know exactly how to explain it either. It's like, we're going to hire 20,000 people. We're going to hire 5,000 people. We're a Chinese company. We're going to start producing stuff in America, of all places. We're going to give people a pay raise. Our minimum wage is going to go from $11 to $15. We're going to give people a $1,000 bonus. Never seen anything like this before. It's almost like Trump got a hold of these business people before the tax reform, said, pal, I'm going to Matt on this tax reform, but here's how this is going to work, Mr. or Mrs. CEO. You're not going to take all this tax reform profit and then buy back shares and give big dividends away and just do nothing but compensate shareholders. You're going to do something for the American workers here. Otherwise, Bernie Sanders will get elected next time and you won't see capitalism the rest of your lifetime. Okay? That's kind of what it feels like to me. I don't know how else to explain it. It's people just crawling over each other to give pay raises, and corporate America just hasn't done that in the last 30 years. Corporate America doesn't give anything to anybody except back to their shareholders. By the way, I'm a full-fledged capitalist, so you can relax. I know I have an economist title, which means I'm a Marxist. I totally understand that. I'm not, okay? But I'm just telling you what can happen. And what my experience, I'm a finance guy. I watch the markets all the time, every day. And I can just tell you that companies for the last 8 years, whenever they get money, they buy back stock or give away a big dividend to shareholders. So this is totally an anomaly from what's been going on in the last 15 years. These are just examples. I want to warn people. This is the first time I think that I've spoken at a CORFAC event. So I want to mention to you that over the last 7 or 8 years, I've been telling people in America, if you're one persuasion of politics, you like MSNBC. And if you're another persuasion of politics, you like Fox News. And I've been telling people for the last 7 or 8 years, if you're watching MSNBC or Fox News for more than 7 minutes a day, not only are you causing yourself emotional damage, but you're wasting your time in the process. It's all propaganda. Just for fun, check this out. Get a real dictionary out. Don't Google it. Get your dictionary out. Open it up. Let that dust kind of flow in your face. Smell that mildew from that thing that you haven't opened for like 30 years. And get a definition of news, propaganda, gossip, and bias. And then take a look at any news feed you get, whether it's from The Guardian or whether it's from Fox News or CNN. Look at the 10 news feeds that you get. I got to move this before I fall over it. And then define them. What I find is about 80% of what I saw I did it 2 days in a row with CNN just for fun. Could have been any of them. 80% of it's gossip and propaganda, and it's all biased. So I'm just warning you, I'm telling people, here's what I saw. What I saw on TV for the last 4 or 5 years is that the U.S. economy is weak, and it's not doing well, and that we have this huge unemployment. Woe is me. And I was telling people, it's like, look, and after the election, the same thing. All you saw on TV was how terrible everything is. And I'm talking to businessmen and women, and they're all on fire. And I was telling people, you need to be careful. If you're watching TV and thinking you're educating yourself about news in America, you could be developing a mindset that isn't even close to the economic reality of this country. Because no media likes to come out and say, boy, the economy's really strong. Lots of people are getting jobs. It's a good time to be in America. That's just not what happens. Propaganda, I picked on one just for fun. I can't paint. I'm one of those people that I can't paint, I can't draw. Start doing this at the rock concert, by the third one, I'm off the beat and my wife will nudge me like, just give it up, you know. But I do like making spreadsheets. And since 1997, oh yeah, if you ever want to have a spreadsheet party and sit around and chat, let's make one together. Pivot table, you know, we can share some joy with that. I've been making spreadsheets about economic data since 1999, and I see this stuff coming. And so here's some propaganda for you. This is just one example of 1,000. Dr. Simon Johnson with MIT is a community college back east somewhere, okay? And he's a management professor. What would you guess a management professor knows about the stock market? That would probably be nothing. Now, with that said, this comes out about 2 days before the election. Investors in the stock market currently regard a Trump presidency as a relatively low probability development. But while the precise consequences of there's the propaganda, bad policies, okay? He's making a judgment for you, and you read Sloan School of Management, MIT, and you go, oh, bad policy. I better not vote for that guy. I have no idea what his policies are, but Simon does. Now, here's where it goes. This is where the warning comes in about listening to this junk and then thinking you know something because somebody said something that's not news, but it's propaganda. And then you go tell your clients that if Trump gets elected, it's going to be horrible for this country. You better sell all of your stock. You better sell all of your real estate before this happens. If investors are wrong and Trump wins, we should expect a big markdown in expected future earnings for a wide range of stocks and a likely crash in the broader market. That's called propaganda. Why would a management professor put that out in the national media 2 days before the election other than total propaganda? And the media is full of it. And so when I teach a class at A&M in College Station, I still teach an hour and a half every semester for a friend of mine for free. And those students ask me afterwards, it's like, so how do you stay informed as a business person trying to give advice to clients and stuff and make decisions for your own company and your own personal, how do you stay apprised of things? My answer is, don't watch any TV. There's nothing on TV that's worth watching other than total propaganda. As a business analyst, I can stay fully informed and have confidence to talk to people like you and the people I talked to 2 days ago and 5 days after and 14 days after that, week after week, experts in every kind of different kind of business. I can stay informed with the Wall Street Journal and Reuters. I don't need any of the rest of it. I read the rest of it a little bit. I don't watch anything. I don't want to have to look at 12 really stupid things on TV to find the one thing that's worth anything. I don't watch anything on TV for news. But you can read the Journal, you can read Reuters, and you don't need any of the rest of it, and not only avoid wasting your time, but also avoid being misguided by people that have an agenda. These medias have agendas. Some of the media have agendas to destroy Democrats. Some of the media have the agenda of destroying Republicans. And neither of that information helps you serve clients. That's what I'm trying to convey to you this morning. And if you're thinking that you're even getting a hint of news off of Facebook, just give it up. Trade Bitcoin instead. It'll work out better for you probably. These TV places, ABC, NBC, any of them, are just nickel and dime advertising sales organizations just like Facebook. Facebook's no different. They'll put, the computer will read it. If you say something like, Betty and I really like working in the garden and we like trimming the bushes. Well, the algorithm will see the word bush in there and think you're a Republican and then start sending you hateful information that Democrats said about you, so you'll click on it and go read what hateful thing they said. And they get a penny for that. And then you go to that site and there's 5 other hateful things that Democrats have said about you, and you can click on those and they can make a penny on every one of those. That's exactly what CNN is all about and all the rest of them. Say a bunch of gossip and propaganda feed it right into who they think you are out there so that you'll stay tuned tomorrow so you can hear other mean things that people said about somebody that you like. It's ridiculous. Just stay away from it. Here's what I would not want to like to have as a customer, okay? If I was Simon right now, I wouldn't feel too good about this next slide here. Let's do this. This is election night. This is the Dow on election night. I remember 10 o'clock Central Time in the United States of America, I'm watching on election night, and the media are all going, whoa, man, it's 10 o'clock. This is a horse race. We're going to be up all night till we get results off of this. And I'm getting a little bit sleepy, and about that time, they go to New York, to Hillary Clinton's headquarters, and everybody there is sobbing uncontrollably and crying. And I'm going, I'm not seeing horse race at this election headquarters. I'm going to bed. I don't think I need to stay up all night just because you got a whole bunch of ads to sell. I'm out. Good night. Unfortunately, some people that read what Simon said about Trump's policies and the unlikelihood of him getting elected, the Dow was at 18.4 at 8:15 in the evening, and by midnight, it was down to 17.4. They traded the Dow down about 900 points. So you have people not only selling all the stock that they own, but they're also shorting the market because Simon said, boy, the market will collapse in that unlikelihood event. By 3 a.m., the market was almost back up to where it was, 18,000 or so, and then now it got up to about 26,000. So that's the kind of stuff I want to avoid with gossip and propaganda and bias. And as a business advisor, you can't help clients if you can't get out of the way of your bias. Trust me, I had to get away from my bias to put that all clear on the front. I didn't really want to do that, but I thought the only reason I wouldn't would just because I don't have the guts to do it. So anyhow, this one example of thousands of the kind of information you're being fed by the media. And people, some big farmer in Iowa about 1.5 years ago says, you sound an awful lot like a candidate we're hearing from these days. And I said, hey, pal, let me help you with that one. I've been talking like this for about the last 15 years before Donald Trump even thought about being on the Celebrity Apprentice. He's right. He's right. He's the only U.S. president that has the guts to say that sort of thing, because every other U.S. president is so afraid of the media. If they say something wrong, the media will crucify them, and they turn around and crucify them anyhow. So that's just kind of how it works. Like I said, I'm not selling Donald Trump. I could care less if Republicans win one election. I don't think they're any better than anybody else. I'm just telling you, as a business person, propaganda and gossip is what you're getting in most of this stuff. Just so you don't think it's just the media and professors, here's Alan Greenspan. I love this one. The fact that our econometric models at the Fed, the best in the world, have been wrong for 14 straight quarters doesn't mean they might not be right in the 15th quarter, okay? That's honest. See, I like guys like that. That's a teammate of mine. I want that guy as a business partner, okay? Now, before I show you the next one, I want to give you a little context. This is starting to look like this, where we are today in the business cycle is starting to look like 1964 all over again. Because in 1964, we passed a tax cut when the economy was in pretty good shape. You see, how things are supposed to work is when you're in the bottom of a recession, you have a tax cut to get people back to work. Well, we didn't do that in 09 or 10 or 11 or 12. It wasn't on the political agenda. Nobody cared about tax cuts and job creation during that period of time. We had other things. Climate change was a big deal. Immigration was a big deal. I don't know what else was a big deal, but creating jobs was not. So all of a sudden, we start growing in spite of Washington, D.C., and then here we are at almost maybe at full employment, and then we do a tax cut right at the absolute wrong time to do it. And so I started looking back in the past, and I found one episode like that, and it was in 1964. The U.S. economy was growing slowly after the Korean War. It was growing, but not fast enough for some people, and so they said, let's do a tax cut, and JFK was convinced we are going to do a tax cut. Well, JFK got killed before the tax cut got enacted. Lyndon Johnson took office, and he and the Senate and the House passed the tax cut kind of as a honor thing to honor JFK. So we had a tax cut in 1964 after about 5 years of economic growth. And I was curious, what happens when you do that? And what happened was we had another 5 years of economic growth, and we didn't have a recession until 5 years later in 1969. And the only reason we had a recession in 69 was because the Federal Reserve decided the party's over. Like we're raising rates now, they raised rates a lot until they created a recession. So my hypothesis is the end of this story is that when you have a tax cut at the top of a market, likely top of an economic cycle, you're likely to have several more years of economic growth with inflationary pressures, and it will end when the inflationary pressure gets high enough that the Fed steps in and says, enough. We're going to raise rates until we create a recession in this country. So anyhow, one more of these Federal Reserve things. So about that time, it's in the early 60s, the Bank of England is getting ready to devalue the British pound. And this is what central bankers do. They never tell you the truth. Doesn't matter what country they're in. They never tell you the truth. Do you think Ben Bernanke would ever come out to you in 2008 and say, we've found out that the CP market, commercial paper market's about ready to close down on Monday, and nobody will be able to make payroll by Wednesday, and so our country's going to be in a complete chaos by Thursday. Do you think he's going to say that? No. What they do is they walk out on the steps of the Federal Reserve with the pillars on a Sunday when they hope nobody's listening, and this is what they say. We here at the Fed stand ready and willing to use any and all resources we have available to achieve our dual mandate of low inflation and full employment. When you ever hear a Fed chairman anywhere on earth saying we're ready to do whatever is necessary, what that means is an asteroid is going to hit the earth in about 4 hours. Okay, duck. Okay, so here's I just collect these. I read these kind of books. People say, what kind of books are you reading? It's embarrassing to me. It's like I'm reading a biography of William McChesney Martin. He's a Fed chairman back in the 50s. I ran into this one reading McChesney Martin's book. So here's Sir Leslie O'Brien, the head of the Bank of England. It's a major duty of every central banker to learn how to exude confidence without positively lying, okay? So you see, I'm not making this up, gang. This is how they operate. This is also propaganda. Central bankers give you nothing but propaganda. Please go out and buy something. Whatever you do. I mean, I remember the day. I got, I don't know how many people I know now, at least by their face, but people email me stuff. And these young guys were in the bond market, in the CMBS market, and they were telling me, the CMBS market's totally froze up. I had heard that the commercial paper market was frozen up. And then here comes Bernanke out on Sunday and says, it's all isolated and contained. There's no credit problems outside of the single-family mortgage market. I'll never forget those words, isolated and contained. And I thought, that dude is totally lying. The CP market is frozen up. The CMBS market is frozen up. The mortgage market is frozen up. What he just said isn't remotely true. And I gave a speech at the Houston branch of the Dallas Fed 2 days later, and I told the Houston Economics Club, I'm not sure if this guy's lying or not, but he's certainly giving us head fakes like in March basketball, because what he's saying isn't even close to true. And I remember thinking about the security I had to go through to get in that building. I thought, I hope I ever get out of here. So anyhow, the truth of the matter is people are getting jobs, people are getting pay raises, household net worth in America, household, not bank, just you and me and your neighbors. Household net worth is now at about $98 trillion. This is why it's as good as it gets. When people feel wealthy, they spend money. It's called the wealth effect. Corporate profits have turned up again. When the oil business went in the tank in 2014 and 15 and part of 16, it hit the whole profit structure of America. Profits are turned a corner again, so it's no wonder that Wall Street is going up. Wall Street's not going up because they think Donald Trump's tweets are witty. The tax cut added a ton of value to every company. If you make $100 in profits and pay $30 in taxes, and then you got 70 at the bottom. If instead of 100 and then 30, if it's 100 and then it's 20, now you suddenly have $80 in profits, and the stock goes up. It'd just be like if they shortened the depreciation schedule for commercial real estate, changed the tax code, said we're going to let people depreciate commercial real estate over 9 years. Overnight, you see what, oh, and by the way, we'll let lawyers and doctors write off the losses from those buildings against their earned income from their medical practice. See what happens there? You automatically create value just with the stroke of a pen. That's what's happened here. The tax cut created value for virtually every company in America, and that's why the market has gone up, in my opinion. Keep in mind, remember, 50-50 chance everything I say is wrong. So when I say that's why the market's gone up, just remember, caveat, but there's a 50% chance this guy doesn't have a clue what he's talking about. I don't want to go to work for MIT, okay? Just not going to go. It's a great place, I'm sure. In case I want to learn some auto mechanics or something, maybe. Okay? Small businesses, I wonder if this thing works. It does. See that right there? That was the day after the election. I called that an explosion. You get around the wrong economist who is afraid to talk because they work for a company that supports Republicans and Democrats. I had that experience 2 or 3 weeks ago. He's up before me going, well, we have noticed a modest increase in consumer confidence and business confidence over the last few months. A noticeable increase. I get up and go, with these charts. He didn't have any charts. I just said, I'm not sure if this is just a noticeable increase. I would call this an explosion, all right? It's a blow up. It happened. Don't take it personally. If you're a Democrat, it's not your fault. It just happened, and this is the fact. And so if you're watching Wolf Blitzer on TV, you think nothing's going well at all, and meanwhile, the business people in his community are just exploding all over the place. How do you explain that one? I mean, you describe that one for yourself. This is the same small business organization, National Federation of Independent Businesses, asking their clients, is now a good time to expand? I'm not sure what you would call that, but that looks like an explosion to me too. So that's where we are right now. Consumer confidence is back up higher than it was in 06, and business confidence is blowing through the roof, and that's the environment you live in today. And the media keep wanting to scare you. It's like, okay, the latest scare is, oh my goodness, Trump just going to put a tariff on aluminum and steel. And we're going to have a trade war, and everything's going to be over. Okay? That's how the media does everything. Now we got a bomb cyclone, all right? It's like, hey, that's a winter storm. And then we even name winter storms. It's like these people are so desperate for you to watch them. It's like, Winter Storm Ajax is going to crush across America with 2 inches of snow. You got to head for the hills, man. I mean, it's pathetic. So you got bomb cyclones, you got this, and we got trade wars. Anything that Donald Trump does, if you're in the media side that doesn't like Republicans, anything that guy does, you're going to say nothing but negative about him. Just like no matter what Barack Obama did, the other kind of media there, no matter what he did, it was always bad. That's just how our media works. That's why it's good to ignore it. But these are the facts, gang. Large companies, 43% say they're going to hire. This is from the fourth quarter. So this was a survey taken in December. The first quarter, 18 is allowed to come out. Which direction do you think that might go? I mean, it seems like every large company on earth in America is going to hire more people. By the way, I've given CORFAC permission to distribute my PowerPoint to anybody that wants it. So a few of you are taking some pictures, but they've got my permission and they have it on this machine here. So feel free to use it. And if you want, you can take my name off of it and put your name on it. I would. I probably would. There's almost 6 million jobs open in this country, and this is getting smaller. All the while, I was out for the last 2 years saying, we're almost at full employment, and this is not a great time to have a tax cut. And people go, we're not at full employment. I watch TV. Our country's in serious trouble, and it's horrible. And you're telling me you're at full employment. This a year and a half ago, there was 4.1 million jobs open, and it just kept getting bigger and bigger and bigger. It peaked at 6 million about 2 months ago, starting to go down. What happens there? You're just starting to fill up. Jobs are filling up across the country. Unemployment now is back down. African American unemployment rate hasn't been lower. It's just cool. This is good. I wish Donald Trump wasn't as stupid as he is about tweeting and stuff. Every time he tweets about Arnold Schwarzenegger or Oprah or something, it's just like damaging the economy. But if you can factor all of Donald Trump out except for his ability to influence business people to get enthusiastic and do something, the guy's better than Ronald Reagan. And Reagan has been my hero up until a month ago. He's still my hero. I would always say, wow, it's been a long time since we had a Reagan talking about business only. But I think we're going to look back here. I'm already looking back and going, okay, Reagan was awesome, but from a job creation standpoint, Trump is better than Reagan as far as I'm concerned. Okay, Robert Kaplan up in Dallas, the president of the Dallas Fed. This was just a couple of days ago. It's a judgment of the Dallas Fed's economists that current levels of headline unemployment as well as U6 are indicative of an economy that's either at or has moved past full employment. We've been there for about a year. You wouldn't hear that on the news, but we've been there for a year. Wages are just not going up fast enough, though. That's why nobody's worried about inflation. At least they haven't been until the tax reform happened. We're at a kind of a turning point where we had no concern about inflation from 2007 or 8 to 2 months ago. Almost 10 years of no concern about inflation whatsoever, and suddenly you have a tax reform, and now we're starting to get a little concerned about it. That's the only threat. When people ask me, it's like, okay, so you're saying clear sailing ahead, what could go wrong? What could I see in the economy over the next 6 months that would tell me that your clear sailing outlook is starting to change? I'm going to hit that in just a second. Number one, from a commercial real estate standpoint, and I've been waiting for this to happen for a few years. I've been telling people like, well, okay, for full disclosure, my retirement account through universities for the last 30 years is with TIAA-CREF. And I have 70% allocation in their commercial real estate account. And the rest of it's in junk bonds. And every 2 years, they send a young guy out and say, make me sign something. It's like, you realize you're not in a fully diversified portfolio. You're a total idiot. And if you lose your money, you can't sue us. Okay? So that's what I get. I follow commercial real estate. The cool thing about that was, mark this one down for your clients. Because I was at 70% allocation before he talked me into buying a little bit of stock. Now 67% allocation. But he went home, that guy, the financial analyst for TI-CREF, went back to the shop, was going to come back 2 weeks later with a recommendation for a portfolio. And I was waiting for him to come back with a little pie chart, large cap, small cap, big cap, international, bond, blah, blah. He walks into my office with his glossy thing, unfolds it, and I'm waiting for that, and he goes, we did a Monte Carlo simulation of 500 portfolios based on all of the different assets of stocks and bonds that we could offer you, and we didn't find one portfolio that outperformed your portfolio. I got that in writing. Why am I telling you that? Not because I want you to think I'm a genius. It's just my investment philosophy is if you don't understand an investment, don't make it. And so all these big companies that you hear about, pension funds that are up in their allocation from 5% real estate to 7 or 7% to 9 or 11 to 12, the only mistake they're making is not by being at 67% allocated to real estate. Now that's changing a little bit. We're at the top of the market. That real estate account of mine is probably fully priced. I don't expect any price appreciation coming out of that. They're trophy properties in the biggest gateway cities. And so it looks like that game is pretty well played out. The good news is there's other opportunities available all over our country and all over the world that aren't in San Francisco or Washington, D.C. or New York or L.A. This is a little disturbing here that the U.S. dollar has been getting weaker. Typically, when we start raising interest rates, that brings money into the U.S. Everybody wants to invest even more in the U.S. We're raising rates and the dollar's going down. Here's what I've been kind of thinking about, telling people occasionally off and on, is that right up for the last 5 years, U.S. real estate really hasn't had much competition. London has a bunch of beautiful buildings, and everybody wants to invest in London. I'm not saying anything about that or any other country. I'm just saying on a big scale, for the last 5 or 6 years, most of the money's been flowing into the U.S. And that's why I've been super bullish about commercial real estate values, because the money, no matter how high it is, no matter how low the cap rate you would tell me about is, I would be saying, yeah, but the money is waiting to pile in. Well, the money is still waiting to pile in. It's just now got a competitor. For the first time in about 7 or 8 years, there's a competitor. Money still wants to come into the U.S., but the other part of that is money is now getting ready to go other places, Europe and Japan in particular. And so out of $100 of global investment money, maybe last 5 or 6 years, $80 of that comes to the U.S., the rest of it goes somewhere else. That $80 is now down to $60 or so, and money was going to other places, specifically Europe and Japan at this point. This little slide here is too small for you to see, but what it shows is investor flows into stocks. And what it shows is, if you squint it enough, and you can have a copy of it so you don't need to squint, but what it shows is that top green line is stocks for going into Europe, and the little line right under it is stocks going into Japan, and then the one under that is emerging markets, and then the red one clear down at the bottom is the U.S. Virtually nothing has been flowing into the U.S. stock market for most of a year now. I know you're not in the stock and bond business, but the same investors that buy buildings from you are not just buying real estate. They're making decisions based on stocks, bonds, international, different countries, and American real estate. And so this is just an indicator that we have a competitor again, finally. We've got other parts of the world that are looking good again. So with that said, what are the threats, possible threats to the U.S. expansion? I have 4 of them here. The likelihood of these 4 happening is pretty low. So if none of this happens, the clear sailing thing is on. All 4 of these have to do with interest rates. So I'm going to want to talk about interest rates for a little bit. It's early enough, you've had caffeine, and so I'm confident we can do this. Here's the thing. Right down the middle here, there's 2 kinds of interest rates. Over here are short-term interest rates, and over here is long-term interest rates. I want to talk about short-term rates first. I'm the chairman of the Fed now. I can raise you every day if I want. I can just come out and say, Federal Open Market Committee says we're going to raise the Fed funds rate another 0.25%. You're at 1.4 right now. Tomorrow I could make you 1.7. A month later I can make you 2%. A month later I can make you 2.5% if I like. I can raise you and lower you whenever I want to. And what happens is when I raise this short-term rate, business loans go up. The prime rate for business loans go up. Some auto loans go up. And loans to people that are borrowing money to buy stock go up too. So the risk would be over here is that the Fed raises your rate too fast that they break something. And so here, when I say break something, here's what they remember 30 years ago. They raised rates 6 times in 1987, not just a quarter at a time, but a couple of them halves at a time. Raised. The last raise was in September of 87, and then October, the Dow fell how much? 25% in one day. The other day when you saw the Dow off 1,600 points and the media is going, wow, in all of our known history, which is at least 3 weeks back, wow, isn't this a record, Betty? Yeah, it is, Jim. Let's bring in somebody from MIT to give us proper perspective here, okay? Do your own research, gang. Do your own homework. You're professionals. That's what you get paid to do, and you're smart enough to do it. Just do it. Just be aware of the hazards of not. 25% decline would be like if you woke up tomorrow morning, opened the Austin American Statesman, and it says Dow falls 5,000 points yesterday. That's what happened here. What happened? Historically, Fed's raising. What do you suppose they do after the Dow falls 25%? Lower. What do you suppose happens to the Dow? raising. What do you suppose happens about 5 months later? The Dow's right back where it was. What happened to the U.S. economy with all that going on? Nothing. The U.S. economy is perking along at this kind of trajectory. You look at it and you won't know it ever happened. It just didn't blink. So if the Dow drops 5,000 points now, that's nothing compared to this in terms of percentage basis. That'd be about a 20% drop. Well, that's pretty big, I guess. But if it happened, don't sit there and sell all your real estate because it's the end of time. Because the Fed will move they can move those rates up and they can move those rates down. I think this is almost a zero probability because I watch what they do. We're thinking about raising rates, and then we look at the market for a day or two. Then we do raise rates, and then we look at the market for a while. And then a month later, we talk about, we might do it again. And that's what they're doing. They're signaling to you, we might do it again. We are doing it again. We might do it another time. And they're checking constantly to see if the market is okay with that because they don't want to replicate this. I think this is a very low probability event because of the reasons I just mentioned. Not to mention the fact that margin debt is at a record high. This is another reason why people should want to own real estate instead of stocks, because people are borrowing money in the stock market at a record level, and when that money comes out, see that little drop there I just highlighted? Margin debt fell 14%, and the Dow dropped from 18,000 to 16,000 in a matter of months. And so see how puny that little drop is compared to real drops? So as people are making investment decisions, should I buy another apartment building with a 5 cap or a 7 cap, whatever kind of property it is, and they're going, wow, this is low. I don't know. These cap rates are low. Well, in the back of their mind, if they know anything about what they're talking about, the alternative is, sure, I would turn up my nose at a 7 cap on a Class B multifamily because I think you ought to be in the market right now with margin debt at a record high. And when the Fed raises these rates too high, people start selling their stock to pay off their margin debt. This is why I'm still bullish. When you get a competitor, when commercial real estate gets a competitor, is right in here. Because when you have these big blowouts in margin debt, suddenly the stock market is a value again, and all of a sudden somebody will say, you know, I've been buying a lot of industrial property from you for the last 5 years, but the stock market now has blown out, the margin debt is gone, and frankly, for the first time in a decade, I'm putting money in the stock market rather than one more commercial real estate building. We're nowhere near that yet. This is set up. The margin debt, what we just saw a couple weeks ago when the Dow dropped 1,600 points, that was nothing compared to what happens when this debt starts coming out of there huge. In fact, it's called margin calls. There's actually a movie called Margin Calls. The guy on the left is the margin clerk. This is how that works. You buy $100 worth of stocks, you borrow $70 to buy it, and all of a sudden your stock is now down to $72. And your margin clerk, the guy on the left, calls you at noon, says, hey, your portfolio is down to $72. You borrowed $70. Here's how this works. You got to come up with $35,000 cash by 2:30 this afternoon, or we're selling your entire portfolio out, period. And I heard a guy on CNBC talking about that, the financial channel. The margin clerk doesn't ask you if you want to, quote, work the order. What that means is you might be kind of cagey, kind of that guy with a concerned look down the bottom right and go, okay, Mr. Clerk, that's okay. You can sell out what you need to, but let's put in a limit order at $100 a share, and we'll just kind of wait until the market bites it and goes. And the guy on the left goes, no, this isn't how this works. We put your order in at market, and if it sells for $2 a share, we don't care. You're liquidated. And when enough of those margin calls come in all at the same time, that's when the Dow drops 1,600 points. What you saw was a glimpse of what happens when that margin debt finally starts to come off. So with that said, I want to switch focus over here to long-term interest rates. And you all are the 10-year Treasury. That's all you got to know to follow the bond market when it comes to commercial real estate is the 10-year Treasury. Probably not a bad thing to know every day. It's super easy to find. It's right there. The Dow was this, gold was this, oil was this, 10-year Treasury. It's 2.884, something like that. Because, number one, the 10-year Treasury is totally tied to mortgage rates, so it has some impact on housing. and it's also partially tied to cap rates on commercial real estate. How we doing? Good. I'm going to finish at 10 after 11, by the way. An old economist in Washington, D.C. told me once, every economist should have the words "in conclusion" in their speech to give their audience hope. Okay? At 10 after, I'm quitting no matter what. Okay? Yeah. All right. So mortgage rates and cap rates, that's you over here, but you're really a 10-year treasury. And so the question is, how does the 10-year treasury go up in value? That's what people are asking you. Oh my gosh, we buy now. Cap rates could be higher at our exit. Our exit cap rate could be higher than what we're getting into right now. Why are they saying that? Because these people might go up. Now I'm back again. I'm chairman of the Fed. I'm Jay Powell now. And I can raise you guys every day if I want to. Stroke of a pen. Problem is, I can't touch you. You go up when you want to. Period. End of story. Greenspan called that a conundrum when he was really in a bad mood. He had a conundrum. He was raising this side of the rates, but he really wanted this side to go up too. And every time he raised this side went down. He called it a conundrum. It's the first time that he found out that central bankers are not omnipotent. And that's a bad day for you when you find that out. Okay. What does make you go up? So when you read in the paper, Fed's raising rates, and it's going to hit the housing market, and it's going to drop commercial real estate values because cap rates go up, there's a person that doesn't know a thing about finance, period. Because the Fed is raising this rate over here, and it has nothing to do with you, and you're the ones that determine cap rates, and there's only one thing that makes you go up, and that is if the whole world starts to perceive that the U.S. is going to have runaway inflation. End of story. Nothing else. Inflation has been a no deal for 10 years. That's why mortgage rates were below 4%. Okay, so a couple of charts here. Here's another one. I just showed you how mortgage rates and the 10-year treasury totally tied together. So, and cap rates are partially tied to the 10-year treasury. And so I mentioned to you that the 10-year treasury is driven by inflation. Well, the red line there is the treasury rate, and the blue line is inflation. You see how they work together? So there's no magic to that. I'm not making it up. So what about inflation? This is what inflation looks like and has been. See right in here? Nothing. That's 35 years of no inflation in this country. Do you remember working in real estate before that? Anybody in this business back in 85? Yeah, me too. Or even way back into 79 or so. You remember when you made a loan and it was 14% interest, floating rate for 6 months? That's the last loan I took at that period of time. Started out at 11. By the time I paid it off 2 years later, after 2 bumps, it started at 11. It was at 17 before I paid it off. This is what happens when you go crazy. Why you go crazy is because people lose confidence in America. That we're just going to print money and you're going to have a high rate of inflation, so your rates have to go up. The moral of the story is we don't have any inflation right now. So when people talk about inflationary fears are perking up, that makes the stock market freak out, but that's what the media likes to do. It's like, man, these winter storms only last a day or two. What do we do next? Well, we mention the word trade war or inflation fears. Here's the survey of 100 people. They're all economists, I'm sure, so it means there's a 50% chance they know what they're talking about either. But when you have 100 of them, it seems like a big deal. And the Fed cites this in front of Congress every time. When you hear Powell or any of the rest of them say, it appears that inflation expectations appear to be well anchored, what they're really saying is, we looked at this chart and it's not going anywhere. So you can see here, look, do you see fears of inflation there at all? All of this is free information from the St. Louis Federal Reserve Bank. You can and it's so easy to use. But legitimately, for the first time since 2008, I'm saying there is some threat of some inflation. There is some threat that this treasury bond over here, this 10-year treasury, could go up 0.5% or even a whole percent. Why? Because we did a tax cut at full employment and there's nobody to work. And so if you start looking for this, you'll see it all over the place. I'm going to be looking for I always try to figure out the most efficient way to look at stuff. And to me, I'm going to be watching the Teamsters Union contract negotiations when their contract with UPS expires in July. That's going to be a true signal about whether or not labor short environment like we live in is strong enough to create inflation. So if the Teamsters settle with the UPS with a 2% pay raise for 2 or 3 years, that's nothing. A 3% pay raise every year, probably no big deal. 4 or 5% a year pay bumps for several years, that will send these people off the chart. You're going to get nervous. And so watch that, because whatever the Teamsters do, then the steel workers will do, then the service employees union will do, and so on and so forth. Hey, the Teamsters got 5 bump for 3 years in a row. That's what we want, or we go on strike. This, I just saw the Cass Freight Index wording just a couple of days ago. They almost never comment like this. It's just the volume of shipments on every mode you can think of. Capacity at most modes has become extremely tight. Pricing power has erupted in those modes to levels that spark overall inflationary concerns in the broader economy. There's that word again, inflationary concerns. These people just got even scareder, and so the Treasury goes up from 2.4 to 2.6, 2.7. Tyson Foods says that the nationwide shortage of trucks and drivers will add millions to its costs, a sign of stresses as companies find distribution channels squeezed. So everything we buy is transported from somewhere, and the cost of transportation is going to go up. Another source of possible inflation would be if oil goes up, and it will all be related to something happening in the Middle East that causes oil wells to go on fire in the Middle East. Anything south of oil wells going on fire is not a big deal to me, personally, as an analyst. The Crown Prince of Saudi Arabia is going to try to do an IPO of a small percentage of their company, Saudi Aramco. They're trying to raise $100 billion. And so the Crown Prince is going to do everything he can to keep the price of oil high this entire year so they can do this IPO. They're either going to try to do it in the U.S. or in London. So that's kind of where it's happening right now. He's found out, notice these words here, active war, declares war. He's found out every time that guy mentions that phrase, active war, the price of oil goes up $5. And then after a while, it starts going down again. So watch and see if he doesn't declare war on everybody over the next 8 or 9 months, trying to creep the price of oil up before this IPO. Here's the third thing, and this is kind of key. So watch the Teamsters Union contract with UPS, and watch what happens on this infrastructure bill that Trump's wanting to get done. $2 trillion was what the campaign promise was. Somebody else will pay for it, probably. Now, here's what happens. The deficit hawks in Congress took a pass. For the last 6 or 8 years, there's been a group either called the Tea Party or the Freedom Caucus that is sitting there in the Senate and the House designed to keep the U.S. government debt from going from 20 trillion to 40 trillion. People are concerned about that across this country, Republican and Democrat. And those hawks disappeared. The tax reform thing, 1.5 trillion added to the deficit expected. 1.5 trillion. These people are getting nervous, like, dog, here we go again, 1.5 trillion. This government's going to start printing money like all governments tend to do. And then we had that budget impasse in Washington where they were going to shut down the government, and in the middle of the night they passed something, and the doors are back open. But what happened was, it's like you got a cat in the house, and they just went to the bathroom in the litter box, and they come out acting like nothing happened, and you can smell it and go, no, I'm pretty sure you went in the litter box, okay? That's what I felt like the day after the government reopened again. $300 billion. Okay, so we got $1.5 trillion from the tax reform, and then we added on another $300 billion for the cat litter incident, and meanwhile the bond market's sitting there going from 2.4 to 2.7 to 2.9. And what do you think might happen is if Congress comes out, does kumbaya. This is what bipartisan politics is. You win, and the taxpayers lose because you get your spending, and somebody's kids will pay for it 100 years from now. Watch this signal. because as this infrastructure bill starts working its way through, if people pay for it, it's great. If it's a user fee, fine. If they raise the gas tax and pay for it, fine. This from these people, you don't care. What you're going to be watching like a hawk is a deal where it's like, we can't raise the gas tax because people get mad about that. And we can't do this because people get mad about that. So what we'll do is we'll do $1.5 trillion in infrastructure and add another $1.5 trillion to the government debt. That's when this goes from 2.7 or 2.9 to 3.4 or so, and then people lose confidence. And this is the last slide I want to show you right here. I saw this in December. This is what you do not want to see, especially if you're over here. You're going, we're watching you like a hawk, government. You print too much money, we'll stop buying your bonds, period. This headline is exactly what makes people like this nervous over here, and it makes me nervous because I know it. And it says, deficit hawks take a back seat. That's related to tax reform. Then that other cat litter incident was another one where deficit hawks take a back seat. If you have infrastructure go down this year and another headline, deficit hawks take a back seat, people will start saying there is no such thing as a deficit hawk anymore, and these rates start going up, and when these rates go up, the Federal Reserve can't control them at all. And the only way you tell these people, you calm them down, you're worried about a hyper inflation event, you're worried the economy's too strong, you're worried we're at full employment. Here's how that works, and I don't want to see it again. I've seen it once. You've seen it probably too if you're old enough. 1982 is the last time that happened. These people were out of control. Here comes Paul Volcker in, chairman of the Fed, big old tall guy, smoking a cigar. Walks in and goes, got a little uncontrolled inflation over here. These people are really nervous. I got this, no problem. What I'll do is I will raise this interest rate to 20%. Nobody will buy a house. Nobody will buy a car. Every farmer in America will go bankrupt. Every home builder in America will go bankrupt. I will do that until you are convinced there is no threat of inflation and your interest rates start going back down to normal. And that's what he did. 1981, 1982, right in there. He just took us into the biggest recession ever. And if you're old enough to remember that, that's what happens when your government loses its ability to maintain some kind of fiscal integrity. I would say out of all of these likelihoods, that is the more likely event. So watch the Teamsters contract and watch what happens with this infrastructure spending. Because if we don't make mistakes here, we're in clear sailing ahead, we're at full employment, people are getting jobs by the thousands, and they're getting pay raises, and they're wealthier than they ever have been, and that is the recipe for economic success in this country. So with that said, I hope you have a wonderful year, and thanks for inviting me to be a part of your program.